Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that massive pump on the Bitcoin chart. And guys, if we do look at altcoins are just pumping along with Bitcoin, but Bitcoin does seem to be the leader at approximately an 8% move so far, and all of the alts are just trailing it. So guys, let's just jump straight over to the chart, and we can see, of course, the weekly chart where we do have the weekly Bollinger Bands midline. And as long as we're above that Bollinger Band's midline, we are in a bull market, bull market, bull market, bull market, bull market, bull market. And guys, of course, sometimes we do break under that Bollinger Band's midline. And when we're under that midline, we are re-entering the bear market, bear market, bear market. Well, this was kind of just a anomaly, but bear market. And then, of course, this massive bear market that we just had. And we did pump above that Bollinger Band's midline, where the Alpha Fam had actually taken a position off of this double bottom and off of this key level that we had marked out, approximately around 16,000, and then again at 17,000, where we were looking for topping patterns in this area. We did have a breakdown underneath that 28,000, and currently we are flirting with that level again. So if we do just zoom in, we can see that in fact this is a retest of the breakdown. It's not a flash wick like we had previously, where we just broke down and then massive institutions just reacquired and pushed the chart back up. What we did have is a breakdown off of this, basically head and shoulders structure that we had up here, this topping pattern, and then the measured move brought us to a support level where we are getting currently a mean reversion play. And I have been looking for this mean reversion for a couple weeks now, almost, it feels like. And of course, the Alpha Fam, if you guys have been following along, then you know that this is what we've been searching for. And we wouldn't have wanted to exit our positions here while everything's dumping. The level that we marked in the sand was 25,000. As long as we were above or approximately at that 26,000 level, we were looking upwards to that mean reversion. And then our goal was to see if we can hang on to 28,000 next. Now, maybe 27,500 might be a little bit of wiggle room there. If we do hold on in this area, then that will be a validation of this mean reversion and then also a possible recovery. And if we are able to get above 29,000, 29,300-ish, then that will be a confirmation and we will have returned to the bull market, guys. If we do, however, break down from this, then we could push as low as that $25,000 area, and losing that, then we could find ourselves 18 to perhaps 23K, and we're going to have to play it by ear at that time when we have more price action. But it is pretty nice that we did have a measured move precisely off of that head and shoulders, and then we did get the mean reversion that we called precisely. So guys, if you've been following along with Alpha Commission, then you guys are just absolutely killing it. Now, if you did want to exit some of your positions, this would be the place to do it, not at the bottom here when we dumped, but here when we've pumped back up. And then if you wanted to re-enter some type of an investment, you would do it either when we confirm a lower position, or if we reacquire that kind of massive support a little bit higher up. Either way, this is your second chance to offload if you weren't able to offload over here before the drop. And that's just risk management, but ultimately that's up to you guys. We are on the 6 hour here. If we do take a look at our last 6 hour chart, you can see just how important these key levels that I point out to you are. And just zooming in here, you can see almost to the dollar precision that this key level off of that alpha momentum pool is where we ended up just spiking through the roof. And so when I present these key levels to you, and when I say above the volatility pivot, above the pool, we have a bullish orientation, and then when we reacquire the Bollinger Band's midline and the neutral point of control, there's a bullish orientation, then you should take it pretty seriously, and you don't want to be shorting above the volatility pivot and above the pool, and definitely not above the neutral point of control, depending on which time frame you are on. If we had been embedded down here, then that would have been your opportunity to short, and the volatility in the market may have pushed us to the downside. But as it happened, we got a volatility shift, right? A volatility shift, a momentum shift where we pushed down and then we pushed back up into the pool. There's a wick ever so slightly below the pool, so we broke down below the pool, right? But we held our volatility pivot, pushed back up into the pool, and that was your permission to long on the re-entry of that pool after that momentum shift, and then the volatility itself took care of the rest. Guys, I do need to update these pools, but let's just go ahead and see what this looked like on the daily. And on the daily, you can see that shift a little bit more clearly, where, of course, we had some push up here, and then that push went down. It broke out of the pool, came back up into the pool. That's a momentum shift, re-entering the pool, permission to long. When we got above that volatility pivot, then that was an indication that this was likely to continue. We broke out of the bearish control zone, again, an indication that we're likely to continue. Now you can take some profit here, you can take some profit here, and you can take some profit again at the neutral point of control. But should we have already pushed this hard up into the air, essentially, we could have a massive pullback. But if we do hold this level, then that would be a very excellent sign on the daily, because that essentially will have put bulls, given bulls the advantage on the chart, whereas under the neutral point of control, they would have no advantage. Now, let's go ahead and do the updates, because this is just ancient history at this point. There's no point in looking backwards. We should just be looking forwards every time we're taking a trade. And so the new daily levels are right here. And you can see, again, the pool is just way down here. Now, this will update at the end of the day, this afternoon US time, and what we really want to do is hold above 27,500. Let me go ahead and put the daily chart on the background there so that we can match our daily levels. And you can see that if we do pull back to 27,500, we're still going to be holding the Bollinger Band midline on the day, and that will be a good sign that we could perhaps continue up and even test this bullish control zone somewhere around 29,000. Now, the levels that I've given you was 25,000 for a breakdown, 26,000 to just hold, and then we wanted to get above 28,000 to have some type of a validation of the potential for a recovery. And then should we be able to recapture 29,000, then that would be confirmation that we were having a recovery. And you can see that our key levels are still indicating these numbers as valid. And of course, these are determined by the RSI, the stochastic, the MACD. We're also using EMAs and just a variety of indicators to mathematically outline these numbers for you. So as long as we're above 26,160, we're doing a good job. Underneath 25,939, there could be the potential for some breaking down there. Really, we want to hold above this neutral point of control at 27,474, and we definitely don't want to wick below 26,624. Okay, that would just put bears firmly in charge again, and we would know that this was a failed recovery underneath this bearish control zone. But as long as we're hanging out around the neutral point of control, it's just the war between the bears and the bulls, trying to see who can take control of this chart. So again, 27,500 is really an important number there. Now let's go ahead and throw on the 6 hour. It shouldn't be that relevant. for today, because it will need an update after this massive push. But you can see that on a 6-hour basis, which does close in 12 minutes, as long as we're above 27,277, then we're still keeping our volatility bias to the upside. Now that'll change slightly over the next 6-hour period, but for the time being, it looks like we're pretty good, and we're probably going to meet that criterion. So again, on the 6-hour, as long as we're above 26,500, we're in the bullish control zone on the 6-hour, and as long as we're above 27,000, essentially 300, we're above the volatility pivot on the 6-hour as well, which does give us a pretty decent chance at holding those that bullish bias on the daily, at least for the day. So I will update tomorrow just to make sure that you guys are all informed. But I just wanted to emphasize, guys, if you did take this trade, you guys are absolutely killing it. We did, stake out this position for quite a long time, and it was way back here at 817. Now it's almost half a month later, so a couple weeks of really just grinding it out. Proud of you guys if you stuck with that. And of course, there has been multiple updates in the Discord. If you want to join the group discussion and get access to some of those charts, please feel free to click on the link in the description of the video below. Guys, that's going to be your alpha for the day. Stay safe and happy trading.